Today, we'll be looking at what retirement really looks like in Canada with $1 million in 2025. One of the most common questions we get from Canadian retirees is whether 1 million is still enough for retirement. And the answer looks very different in 2025 than it did just even a few years ago. That's why we're making this video today, to show you what life actually looks like retiring in Canada with $1 million in 2025. Let's get right into it.
So, most Canadians used to believe that having $1 million portfolio meant that retirement was paid for.
Yeah.
Becoming a millionaire, you were able to retire with no issues. But sometimes what people spend don't necessarily match those expectations. I think that most people believe that $1 million in a portfolio could provide for $50,000, $60,000 in annual spend. But reality shows us that most sustainable spending might only be at $35,000 to $45,000. Now, depending on where you live in Canada,
Yeah.
depending on what expenses could be, will really determine, what you're able to spend on an annual basis. Especially with inflation being so prevalent over the last 3 years, that expectation of spending and what you can draw out of your portfolio don't necessarily align.
Yeah, I agree there, Carlo. I mean, essentially, we have this conversation often where the amount you draw out of your portfolio is going to be dependent on the lifestyle that you live. Not everyone is going to maybe even need $1 million, let's say, in retirement in order to have the retirement that they're looking for. But if you're spending upwards of $100,000 plus, you're going to be forced to deplete a lot out of your portfolio, probably a lot faster than you would want it to have happened. And sometimes overestimating the spending power does impact people's retirements. When creating a financial plan, you want to be as accurate as possible. You want to be able to kind of leave a little bit of wiggle room because we know we may plan to spend a certain amount, but some expenses just come up out of the blue. So it's important for people to understand that maybe not a 5 to 6% withdrawal rate may not be good for them if they want to not really impact their nest egg, so to speak. It might mean scaling back the amount you withdraw. Maybe it's 35,000, maybe even 45,000, again, depending on the regions in which you live and how much your cost of living may be. But having a withdrawal rate in around that 3.5 to 4.5% might be more sustainable and might be the better solution going forward.
Now that you can understand how these Canadian retirement insights can impact your future, you need to realize this goes beyond just one aspect of retirement planning. It's about creating a complete strategy that protects your entire financial future. And even though videos like this one are great for understanding retirement concepts, what's most important is knowing how to apply these principles to your situation. That's exactly why we put together a free video where we break down our exact system for building a successful retirement. In this video, you'll discover the step-by-step process we use to help our clients with their dream retirement. Click the link below to watch it now. Now, back to the video. Thanks, John. I'm really glad that you brought up the 3.5 to 4.5% withdrawal rate, because that is a far more safe withdrawal rate from your portfolio
Mhm.
to not fear dipping into your capital.
Yeah.
So let's take a look at an example of a 65-year-old with $1 million portfolio. Assuming that they could spend $50,000 to $60,000 a year, or 5 to 6% withdrawal rate, that would mean that they're typically drawing into their capital if they're pulling more than that 4% out of their portfolio. So this client has been successful, has been able to accumulate $1 million in their portfolio, but it's the spending assumptions that they
Yeah.
had that can lead to a very dangerous retirement lifestyle. So planning lifestyle should be based on the more conservative withdrawal rates. And that way you're not putting yourself into a position where you no longer have income, you have to sell your house, downsize when it doesn't necessarily make sense, and try to find different income sources. Proper planning and a more conservative withdrawal rate is what's going to make your retirement successful.
Yeah, naturally, it's especially as you get older, you're going to have less and less risk when investing into the markets. Therefore, you're going to have an expected lower rate of return. Realistically, we want to make sure that there's not going to be a lot of volatile swings in the market that's going to impact when you need to draw funds out of that portfolio. If you are more conservative as you get on the investing side of things, that's why that withdrawal rate tends to come down as well. So that's something to consider, especially if your portfolio, let's say, has gotten a little bit more conservative. Those withdrawal rates should be also factoring in as well. Now that you've seen what retirement in 2025 in Canada really looks like with $1 million, what surprises us most in our practice is how today's economic reality has transformed what this level of savings could provide. Through working with Canadian retirees, we've discovered that successful retirement with $1 million isn't about following conventional wisdom. It's about adapting to new realities of inflation, market conditions, and living costs in different regions within Canada. The most comfortable retirees aren't just the ones who hit the $1 million mark, they're the ones who understand how to maximize their CPP, old age security, and investment income in today's environment. If you want to further optimize your retirement plan, we put together a free video breaking down our exact system that's helped hundreds of Canadian retirees plan their dream retirement. Just click the link below to watch it, and we'll see you in the next one.